So maybe let's move on to the next topic where we talk about alternative financing or how you bridge your credit gap. So I guess SMEs, when all the surveys that I've seen done by the government or done by independent parties, the number one problem or the top two problems that's always faced at SME in Singapore is always on operating costs. How do I fund my operating costs and expenses? How do I invest in capex? How do I raise a fund for my company when I'm still in a slightly or loss-making positions? So, of course, in the past, people always think, who do I borrow money from first? It will always be the banks, right? There's many banks in Singapore. Bulk of the 3 local banks in Singapore are very strong. Bulk of the top-tier international banks are also operating in Singapore. So, but what makes it difficult to get money from them, or to get any single dollar from all the banks, is they go through a very long credit process on the bankers asking you several questions on your financials, on your business, on your health as an entrepreneur and key promoter. So it makes it very cumbersome, as well as they ask for a lot of securities that you might need in terms of, say, personal securities or tangible assets such as a property for a security for them to lend you any money. So now the questions for SMEs are nowadays, especially with so much technology coming into Singapore or the world, what are some of the alternative financing that you can think of using some sort of technology to help you bridge your funding gap? So maybe Kelvin, time for you to speak. So we hear a lot of crowdfunding, crowdfunding platforms in the market for the past 2 years, and Funding Societies has been at the forefront of this. So how does it work?
Sure, perhaps since we are not as well known as InCorp, we would like to do just a quick introduction of ourselves, right?
You're quite well known, don't worry.
So we are a crowdfunding or digital financing platform for small medium businesses. And in short, we allow businesses to apply for unsecured term loans or invoice financing by going through the internet. So by going to our website, www.fundingsocieties.com, you can basically apply for a loan. And this loan can be dispersed to your bank account as quickly as the same day or at the end of the week. And this funds is actually crowdfunded. Unlike in the case of a bank, it's actually crowdfunded by individuals or institutions around the world. So currently we are licensed by MES in Singapore, as well as Securities Commission in Malaysia and OJK in Indonesia. So currently we're the biggest platform in Southeast Asia, and we have crowdfunded and dispersed approximately 140 million Sing dollars of loans to 2,000 plus SMEs to date in the last 2.5 years, 3 years or so. Where we differentiate ourselves in terms of banks is that we are really trying to serve the gap between SME that has just started. And usually when you just start, where do you get your funds? The typical 3 Fs, right? Friends, families, and fools. And of course nowadays we have government grants as well. But oftentimes within these first 2-3 years, the funds that you can get from 3 Fs can deplete very quickly. Yet at the same time, you'll notice that on the other hand, banks typically would not be willing to lend any money to you unless you have at A, a 3-year track record, and B, a 3-year good track record. And even then, they may even demand collateral from you. So our goal is really to fit between the two gaps, right? That, hey, you may have some traction, but you may not have been good enough to qualify for bank financing. So therefore, we come in and provide a certain form of financing. So in terms of what we offer, in terms of quantum-wise, we're really looking between 10,000 Sing dollars all the way to 1.5 million Sing dollars at a tenure of between 1 month to 12 months or so. And this is actually almost opposite of what the banks offer, right? They like to offer a big loan and a really long loan. So if you are looking for a few 100,000, honestly, most of the banks are not that excited about serving you because the margin is still relatively thin. So they like to give you really big loans, say a $5 million loan or a few $1 million loans, but for a really long period of time. Whereas for us, we like to give smaller quantum for a shorter amount of time. But there is an implication of that, which is that while we do not ask for any collateral, while we may only ask for receivables for pledging, our interest rates are higher than what the banks are charging, primarily because we do not have the benefit of getting funds at 0.05% fixed deposit rates. So because these funds are being crowdfunded by the public, by you, myself, or even institutions overseas, they do expect a relatively competitive risk-adjusted returns. So our interest rates range between 9 to 16%, averaging about 12%. Or basically 1% a month. So we are way faster than banks, We are way more convenient than banks and more accessible than banks, but we are a bit more expensive than banks. So I think that's how we actually differentiate ourselves in terms of financing. So far we have been working quite closely with BID in terms of DBS in Singapore, RHB in Malaysia, as well as Bank Setamas in Indonesia, because we see that we are really complementing the different needs that complementing banks in terms of serving different needs for small medium businesses.
Thank you, Kelvin. So before companies or SMEs or startups seek for funding, what do you look at? Because the financial records won't be very strong. The financial records, or rather, may not even be there. So, what kind of priority you need to put this on financials per se?
Sure.
Yeah.
I think sometimes we ourselves are SMEs and we do reach out to banks to see how can we potentially get a wholesale line, right? And what we always realize is that sometimes the credit decision is like a black box to a lot of companies, right? Like they reject you and they will never tell you why. So I think many people can just Google search the standard 5 C's of credit, which is capital, collateral. The first 2 C's are what the banks usually rely on in terms of assessing whether can they give you a loan or not. So if your payout capital is low, or if there's not much collateral, typically they reject you. For us, we take almost the opposite approach, right? And we rely on the other 3 C's out of the 5 C's, right? We look at character, we look at conditions, and look at capacity. So capacity, whether how strong your cash flow is on a monthly basis, and after subtracting all the costs, and potentially minusing off discounting some fluctuation in your cash flow, what is left, is it sufficient to make the monthly repayments or not for this particular loan? And if you are able to make these monthly repayments, we're happy to lend it to you. So that's capacity. Conditions. Are you able to pledge certain receivables to us? So receivables are not quite a hard asset, but rather future repayments that you can receive. So if you're able to pledge certain kind of receivables to us, we can give you a cheaper rate because there's a certain level of security. And finally, character. Hey, has this person been defaulting on the credit cards? Has this person had good previous track record, so and so forth, right? So we are really focusing on the software aspects of things and trying to underwrite in an efficient manner using data and technology. So that's how we actually complement banks. So by implication of that, whenever we apply to financing from us, and oftentimes we do ask quite a bit of questions because a lot of this information, character, conditions, and capacity are not captured in your hard assets. So we do ask certain questions, and those are really trying to clarify these 3 things. So to the extent that you can give a certain level of certainty that, hey, you have the willingness and ability to repay, we'll be very happy to lend it to you. In fact, nowadays what we realize, there are 2-3 reasons why companies come to us. Number 1 is that because they can't get from banks, which is kind of usual reason, right? But the second key reason is that we are just faster. So we have listed companies coming to us, hey, I need $1.5 million because they are worried that the GST will go up, so they went to do some shopping. They need to pay up deposit very quickly, but they can't get the financing immediately. They need the money, hey, I need the money by the end of this week, can you disperse it to me? So they come to us because of speed. The third reason they come to us is that, hey, I can get financing from banks, but my collateral can only allow me to get this amount of financing. I need this amount. Can you give us a top up in terms of financing? And the fourth reason that SMEs recently, which is really interesting, they come to us is that, hey, I can get a bank loan, I don't need your money, but I'm worried that one day the bank will just withdraw the credit line from me. Can I get a small loan from you just to build a relationship? And this is increasingly becoming more and more as the bank starts adjusting their credit criteria. So in short, the 5 C's, do Google up, that's how banks as well as us, fintech companies evaluate. And there are various use cases, hopefully we'll be able to serve and help you with one business.
Thank you, Kelvin. So we talk about a lot about financials and accounting. So for the experts here, Paul, what will you advise companies or SMEs or large companies when in terms of accounting, and how do third-party accounting firms like us will be the value add to companies here?
I think what I can say is, firstly, we are in Singapore and you operate your business in Singapore. One of the things that you will perpetually face is the tight labor market and the employing of talents, retaining of talents. So what I want to say is that when you do decide that you have had enough of your grievances and frustrations in trying to retain your accounting staff and your accounting team, One alternative is to outsource that function to us, for example, and then you get continuity as well, and you don't have to worry about if that person were to leave. That's one. But of course, being an outsourced and specialized accounting department company, we are technically a lot more updated. Not that it matters to you, but at least you can sleep easy. You have a peace of mind that whatever financial statements that's been generated for whatever purpose, for the banks, for the relevant authorities, etc., will stand up to scrutiny. Last but not least, actually, because we are also sort of expert in our own fields, we do the analysis as a team rather than you're relying on one CFO or one accountant. So there's always that bouncing of ideas, etc. And there's several levels of controls. So that's why you should actually consider outsourcing your accounting functions.
A bit of effort for us, but so maybe we'll talk about how we raise for funding or loans through alternative financiers like funding societies or through traditional channels like the banks. So in the recent 5 to 10 years, you hear a lot about fundraising by entrepreneurs or business owners by giving out equity in the company. Yeah, so this is a very hot topic, and maybe for Marianne, I think in Singapore there's a few success cases or unicorns per se who are very successful in raising funding from VCs or private equities of the world. So maybe you can share a little bit to be inspirational point for all the companies here.
Yeah, so I think like Eric rightly pointed out, I mean there's a lot of maybe in the newspapers, I mean you hear a lot of success stories from companies who have successfully raised money over the years. So even on a macro perspective, I mean if you look at the trends and all that, I mean there's really an increase in terms of the number of companies that are being funded. I mean we just look at 2017 alone, companies like Grab, they've also successfully raised $2 billion. Yeah, and we have also seen like Carousel is also another one. So they also did a very successful Series C round. They raised about 70-80 million. And then, just 2 months ago in the papers as well, we have companies like Ninja Van. So they also did another Series C round. Yeah, that was also about I think 87 million or so. Yeah, so I mean there's a lot of success stories out there. I mean every time when you read, whether it's the tech news or the newspapers and all that, there's always a lot of companies raising funds and all that. Yeah, so I mean on the other end, there are also companies that are also bootstrapping their business. So that means using funds out of their own pocket, being prudent in their spending and all that. So I mean this actually depends on individual companies. I mean how you want to actually spend your money, what are you actually seeking the investment for. So yeah.
So maybe Kelvin, as a founder as well of Funding Society, I think you have done fair share of fundraising from private equities of the world. So maybe you can share with us some of your experiences.
Sure. So for context, we were launched in 2015 June. So within 2 months, we actually raised our seed capital from Alpha JWC, which is an Indonesia-based VC fund, for about $1.2 million. And the intention was that, hey, we are going to expand to Indonesia, and these guys, in addition to money, they can be potentially helpful in terms of network. So we actually raised it from them. So we expanded into Indonesia in 2016 January, so about 6 months later. And we closed our Series A with Sequoia Capital in August 2016 for an amount of about $7 million. And shortly entered into Malaysia. So we have in total raised about $8+ million USD in the last 2.5 years or so. So I think the several thoughts about the fundraising scene is that there is increasing amount of venture capital funds for startups that may or may not have a proven business model or even product. And that's really true, especially in a country like Singapore. But that it does come with a certain price, and which is that venture capital funds are willing to fund you because they expect a big payout at the end of 5 years or 7 years. And therefore, it does require or demand you to have a business model that can at least grow by 300% to 500% a year. So that by the time at the end of 5 years, you'll be potentially a $500 million or a $1 billion US dollar company. So that's how they make profits. So that's one. But also on top of that, it does come at a certain level of dilution in terms of their own equity, right? So examples of Ninja Van or Grab, the truth is that yes, they've raised a huge amount of money, but that came at a price. which is that a lot of these founders have a shareholding of less than a quarter, or sometimes less than 10%. So you are really trading off a high chance of growing really big at the cost of certain level of ownership. But of course, there's a huge plus towards it, which is that oftentimes these investors do not just come with capital, they come with expertise, they come with branding, they come with connections, they come with network or even strategic partnerships and help. So the thinking is always to make sure that it's a bit like it's not even a date, right? It's like a marriage, right? That if you're going to take money from these guys, make sure that you really love these guys, right? And that's really, really important. So, and before you get into a marriage, make sure you date enough, right? Like you want to know that, hey, what are different venture capital funds offering? Speak to their ex-girlfriends, like, hey, who have dated them, hey, is this guys good to take money from? And I think that the principle holds true in venture capital funds, except that if you date or you get, if you marry, you divorce, it's still not too bad. But these guys, you just can't divorce them. Either you leave the company or, actually that's the only choice, right? Or you get another bigger investor to buy it out, which is going to be very hard. So it's a high risk, high return game, highly promising, but make sure that you go in with the eyes open and speak to enough people before actually accepting certain level of certain capital from a specific fund.
Thank you, Kelvin. Very useful indeed. I mean, if you have any more questions after this, you can approach Kelvin and then approach me or Artin. We can share with you some experiences from introducer of a marriage, I would say, in terms of raising funding for equity. So maybe let's move on to our last topic of the day, which is in terms of internationalization or expansion strategies as a Singapore company. So Singapore is always seen as a hub for regional expansion in Asia, or there are people who always call us as the gateway to ASEAN per se. So maybe on the government or ACE's end, what are some of the advice that Marian, you will give to startups and SMEs who are considering to expand overseas, to expand the business?
Okay, so on ACE side, ACE, we are not a government agency, we're actually a private organization supported by the government. So we just opened our international center in September last year. Yeah, so with this new international center, our mandate is really to help both local startups to expand overseas, as well as international startups looking to come to Singapore. Yeah, so when we look at this, right, I mean, there's a lot of efforts about from the government and all that to actually foster more internationalization as well as global partnerships. Yeah, so what our international center is actually set up to do is actually we have a range of services. Whether it's in terms of helping startups to incorporate, so that's where we actually partner with InCorp as well. We also have a series of business advisory clinics, workshops, and we also run this market access program, which basically helps startups to understand more about the countries that they wish to expand into before they really embark on this journey. Yeah, so when they come to us, we actually bring through them through a series of workshops, clinics. We also introduce them to our different networks of partners that is actually relevant to their business. Yeah, so we do a lot of one-on-one customization depending on the company as well to actually prepare them for their internationalization journey. Yeah. So I mean, in this aspect, these are some of the things we do at ACE to actually help companies in terms of wanting to expand abroad. Yeah, so just feel free to approach us if you want to find out more.
So in terms of the governments and or IE or international enterprise, who's going to be Enterprise Singapore soon. So there are also some schemes, Paul and Marian, in terms of helping Singapore companies or Singapore headquartered companies to go out of Singapore and defray some of the expenses. So maybe Paul, you want to start off with what are some of the schemes for that IE or TOBES that's going to administer to help Singapore companies expand out?
As mentioned by Marianne, actually, IE Singapore and Spring Singapore, they're going to merge and it's going to be called ESG, Enterprise Singapore. And they're going to streamline a few of the grants, which also I think Marianne have mentioned just now. I just want to say a few of the low-lying fruits, especially in terms of internationalization. If you are ever intending to take part in, say, an overseas trade fair, don't do so until you get some grants from IE Singapore now, and it's going to be ESG, for example. And let's say the taking part or participation in an overseas trade fair is going to be, just use a rounded and simple figure, $10,000. You can get as much as 70%, $7,000 being funded by IE Singapore. And the other 3,000, which will be out of pocket, please know that will be, you will get double deduction for that $3,000 as well. It's not just deductible, but you get 2 times of it as deductible. So these are all very low-lying fruit. MRA, Marketing Readiness Assessment, that's another very simple low-lying fruit you want to get. You want to see whether your product or service might be suitable for a foreign market. You get a consultant, whether it's a local consultant or somebody, to do a bit of a research and report, and then you pay that particular consultant. Again, we are talking about very small figures, $10,000 for example. The same rule applies. You can go to IE Singapore, you get 70% grant, and then the $3,000 again will be available for double deduction. Something like that. Okay.
So Marion, you were talking about the EDG or the Enterprise Development Grant earlier on, and I think it's a merger of the GCP scheme into this grant as well. So maybe you want to go more in depth and share with our participants here today, how can they use this grant to explore going out or setting up or incorporating overseas?
Yeah, so the EDG grant, this will actually help companies in terms of internationalization efforts. Yeah, so I think this actually covers up to 70% support as well. So there's also some similarities in terms of the MRA grant and this EDG grant. Yeah, so I think for more details about this EDG grant, we have to wait for EDG for further announcements. I think they will only do it, I think, sometime second quarter of this year.